Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we normally start talking about the S&P 500, and we have particular interest in it because you have taken a position on it, and we do hope that it sort of heads south to the 21st of April, which I guess is when you hope to cash in on this position.
Yes, that's right. So we do always have a look at the S&P 500 first up, and you can see it up on the screen here at the moment. What is quite evident is that it's been in consolidation mode since the first week, in fact, since the end of February, first day of March, really. You can see that is when the S&P 500 peaked, and since then it has been making lower highs and lower lows. So quite a nice, healthy consolidation that's happening there at the moment. In the immediate term, the trading range is about 23.50 at the lower levels up to 23.70. So it needs to break one way or the other in order to open up a move in the direction of the break. You mentioned the option structure that we have. So you can see the payoff profile on the right-hand side of the chart here. There you can see below 23.50 we start to make money on this option structure, and we make our maximum profit down at 22.80. So, obviously, yes, I am kind of hoping that we see it drifting a little bit lower in the near term, because that would put the structure in the money for us. And if we don't, if it doesn't go lower, then we lose our premium of $140, which is not the end of the world. We've already accounted for that premium pay away. But it would be nice to see this thing working, and especially given that it is so close. I mean, the 23.50 is right where we're trading at the moment.
Yeah, I mean, it's kind of what, a 70-point drop?
Yeah,
really.
it's not far away. It doesn't have to do much for this position to start making money on the downside. And it does expire on the 21st of April, as you said. So that really gives us only about 10 days until this thing expires. So it is sort of the final stretch now, and ideally I would prefer to see it coming down a little bit. The support levels at the lower end are here at 2300, and then below that at 2280 there's a big zone of support. So if we did see it drifting and pulling back below this 50-day moving average and coming down into those lower levels, that would be ideal in terms of this option structure for us.
Yeah. Well, I mean, there might be, and I know you are going to talk about the VIX, because maybe that's a clue as to whether or not there could be a pullback in the offing. And just maybe explain for those who don't know what the VIX is all about, what it indicates in the market.
Yes, so this is interesting. What the VIX is, it's the Chicago Board Options Exchange Volatility Index. It is a measure of implied volatility on S&P 500 options. So what it looks at where option writers and options traders are effectively pricing volatility when pricing up options on the S&P 500. In an environment where volatility is high, then you'll find that options become more expensive. And in an environment where volatility is low, options are generally cheaper. Because this is a measure of implied volatility, it's what the market is anticipating and what it's expecting volatility to look like. So think of it a little bit like an insurance premium for your car. If you live in a dangerous area where the crime rate is high, you could maybe equate that to a volatile area, okay? And your insurance premium will be higher, okay? Similarly, if you live in a safe area and your car is locked up in a garage at night, then your insurance premium will be lower. Yep. Now, effectively, traders of options on the S&P 500, or any options for that matter, are very often looking to try and buy protection. And that protection becomes more expensive if the environment is deemed to be more volatile, and that protection becomes cheaper if the environment is deemed to be less volatile. Now, we've had a very, very low volatile environment over the last 3 months of this year. And in fact, you can see there, since the beginning of 2017, which is there where my mouse is now, we've seen the VIX staying below 13, which is very, very low by historical standards. And it's even been down below 11 at some stages during this last quarter. So it's been an incredibly low volatility quarter for the S&P 500. Now, something that caught my eye yesterday is that all of a sudden, very quietly, the VIX index has actually been pushing up. And you can see that yesterday's close is now at the highest closing level for 2017. I'm ignoring this candle over here from late March. That was when Donald Trump lost his repeal of Obamacare, and it very quickly saw volatility pushing up, but it didn't stay up for very long, and you can see that the VIX closed that day below the 13 resistance level. So this is actually the highest closing value that we've had on the VIX for the year to date. All right, and interestingly, that this has come about at a time where the S&P 500 hasn't been particularly volatile. So what I'm getting at here is I'm saying, is this maybe the market beginning to tell us that it's forecasting an increase in volatility in the near term?
I mean, which could have, increase in volatility isn't necessarily bad news. It could be that the market suddenly shoots higher, of course, which would be bad for us.
Yeah, it's possible, but usually a volatility spike is associated with the market coming down. You'll usually find volatility is the highest when the market is the weakest. So it's possible that this VIX chart is actually telling us that maybe the options market in the US is starting to price in a higher volatility as we go into the second quarter now.
Yeah, which of course would play into our hands.
It would, yes. If the S&P 500 did come down, then that would certainly play into our hands in terms of our option structure.
Yeah. And just a very quick look at the top 40 before we talk about some individual stocks. The downgrade has done wonders for the Rand hedges and ergo the top 40 index.
Yeah, that's right. So here is our top 40 index. Last week on the show, we highlighted how this channel has been broken to the upside. We looked at 45,500 last week as being a resistance level that looked as if it was likely to break to the upside, and that would probably then target this high from January, which is at 46,800. Now, as we sit here right now, the market is trading up at 46,800. So it's reached that level. Now it remains to be seen whether it continues to push higher or not. But as you mentioned, the weaker Rand really has played a very, very significant part in pushing the top 40 higher here. And if the Rand remains on the back foot, then you probably will find that the top 40 continues to be fairly well bid at the lower levels.
Yeah. All right, moving on to some recent trades, Garth. Last week's trade was in Grindrod, and theoretically a weaker Rand should partially help them, but it hasn't, and this one hasn't worked out.
No, it hasn't. Unfortunately, it hasn't worked out for us. You can see what I looked at last week was the possibility that we had this ascending triangle type of structure here, and I felt that the pullback to the 50-day moving average and the reversal up from there was probably setting up a breakout through this overhead resistance at about 14 Rand 20. And so we went long at 14 Rand 38. Sorry, that overhead resistance is at 14.70. We went long of 960 CFDs at 14 Rand 38 with a stop loss of 13.90. And my target that I was looking for here was 15.50. Now, unfortunately, it went the other way. It's actually traded down. It's gone below our stop loss. So I closed out the trade at 13 Rand 85. And that meant that we incurred a loss of 566 Rand. So it's a very small loss. And actually, we were lucky because I made a mistake with the position size last week.
Viewers you were suffering from man flu.
I was suffering from a dreadful, dreadful dose of man flu, and obviously the man flu affected my brain, and I messed up the calculation completely. But it's kind of played into our hands because we had a smaller position than what we should have. So when it got stopped out, we got stopped out on this tiny little position, which meant we only lost 566 Rand. So it's not the end of the world.
No,
and we're out. Unfortunately, we did lose a bit of money, but anyway, it could have been worse if I'd done my sums right.
Well, it's great to be saved from oneself.
Yeah, I suppose there's an upshot to that. Yeah, every cloud has a silver lining. If I look at the chart now, just introducing that dotted line at the lower levels, it's actually interesting. Maybe now would be a better area to be looking to buy Grindrod rather than where I bought it last time. But anyway, we're not going to go back into the trade, but I just think that's interesting. Maybe for viewers that didn't follow me, maybe they look at it now and think it looks a bit better at this level because it is holding that upward trend support as indicated by the dotted line there.
Yeah, okay, well, not catastrophic. And certainly what's working out very, very nicely for you indeed is Naspers, and you're running that position.
Yes, that's correct. Naspers is looking fantastic for us. So this trade we've had on now for probably about a month almost. And when we talk about running profits, this is a great example of how to do it. It's working very, very nicely for us. I looked at this channel that was evident on Naspers, and at the time I saw a big disconnect between Naspers and Tencent, and I figured it was time to buy Naspers for a breakout through this channel. And I went long with 30 CFDs at 2,165 Rand, with a stop loss below the bottom of that channel, which was at 2,100 Rand. We've now seen it moving higher. My initial target was 2,300 Rand, but I've been saying week after week that I actually think that is too conservative and we should rather look to run the profit. And that is turning out to be a great thing to have done.
Yeah.
I'm now basically following a strategy where I'm looking at a previous 2-day low as a trailing stop loss. And so far, it has kept us in the trade. So as it continues higher and higher and higher, so we are making more and more money out of this trade. So it's really, really looking good for us.
Garth, do you pay much attention to the stochastics when a trade is winning for you? Because from that chart, it just looks like it might be rather overbought at this point.
It certainly is overbought at this point, but what you must also remember is that in a very strong trend, your stochastic reading can stay overbought for an extended period of time. So I'm not going to worry myself too much with that as things stand right now. I'm going to let this profit run, and as long as the market is moving higher, as long as the stock continues to make a higher move every day or every second day, then I'm actually happy to stay in it. But obviously, I also don't want to give back all of the profits that we've made. So I'm running this trailing stop loss, and if the trailing stop loss should trigger, then it'll close us out. We'll at least walk away with some handsome profits here.
Yeah. Okay, well, that's, good news. Right, something to watch this week. It's not a trade that you've actually entered into, but a trade that you're flagging, and that's potentially a long position in gold. Yeah,
the gold price interests me. What's evident over here, this is the price of spot gold in dollars now. And what's quite interesting is notice the 200-day moving average, which is that red line over there. Notice how the gold price has been bumping up against the underside of that 200-day moving average. And that kind of comes in at about $1,262 an ounce. That's a resistance level. The fact that it keeps pushing up and pushing up and pushing up without coming lower suggests to me that there's probably a fairly strong chance that we might see the gold price breaking out through that resistance zone. So I think it's worthwhile keeping an eye on this in the week ahead. If we do see the price breaking up above that resistance level, then chances are we'll see it moving up towards $1,300 an ounce. And I think with all the geopolitical risks around at the moment, that to me looks like a fairly probable outcome.
I mean, is there a correlation between the gold price and the VIX in any way?
So, yeah, not directly, but sometimes. If there's a lot of fear in the markets for some or other reason, that can sometimes relate into VIX spiking and gold moving up. So there's not a direct correlation, but sometimes they can be related to a certain extent.
And then just one last question, Garth, on gold. Would you look, if you do enter into a trade, would you trade the spot gold price, or would you trade something like a new gold?
I would want to trade the spot gold price here, I think, because that we have the offshore account, which allows us to do it. And also the new gold, remember, is a locally listed ETF that tracks the rand price of gold. So there's two variables there. There's the dollar gold price and the rand dollar exchange rate. And sometimes those two can play off against one another, or sometimes they can play in each other's favor. But anyway, I think to answer your question, I'll probably look to trade it via spot gold if I do it, rather than through that new gold exchange traded fund.
Yeah. Okay. So, given all that's happened over the last week or so, what do the portfolios look like?
So here's our South African portfolio measured in rands, and it's doing very well. You can see our nice, handsome profit there on Naspers. We're sitting with 8,500 rand in profit there. That accounts for pretty much all our profits for the year to date, actually. So it's certainly helping to mask a couple of other trades that haven't worked in our favor. So we're sitting with 106,800 rand there, up 6.8% for the year to date, which is not bad considering we're only one quarter into the year. And then our offshore portfolio, unfortunately, not looking as fantastic. We're still down 1.9% for the year there. The trade that is very much in play here at the moment is our trade on the options, the S&P500 options. And we're watching that really closely in the week ahead because that could start to make us money if the market begins to pull back. If not, well, then that we've accounted for the premium pay away on that option structure anyway.
I mean, if you managed to make the maximum on that trade, say there was quite a sharp reversal on the S&P 500s, probably a 10% gain.
Yeah, it would. It would give us $1,260, which would translate into about £1,000. So yes, it would give us a sudden 10% increase in the value of this offshore portfolio.
Yeah. Okay. We'll hold thumbs.
Yes.
Garth, and then just to finish off with your upcoming courses.
Yeah, I'm busy in May. I've got an Understanding CFDs course in Joburg on the 11th of May, and then High Probability Trading course. I've got one in Joburg on the 13th of May and one in Cape Town on the 27th of May. So anyone that's interested in attending any of these courses, please send me an email, garth@traderscorner.co.za, and I'll send you all the details.
And just the last heads up that you can subscribe to a weekly email.
Yes, you can. If you go to traderscorner.co.za, you can see the link in the middle of the page there, which you can click on and enter your details to subscribe for a free weekly email, which will give you a heads up on what's coming up on the show for the week ahead. Every Tuesday, you'll get an email at around about lunchtime, which details what you can expect on the show for that week.
Great. Garth, we'll leave it there. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.